I'm here today speaking with Lynn Walsh, the editor of Socialism Today, the Socialist Party's monthly magazine. Lynn, this morning we woke up to hear Alistair Darling, Chancellor of the Exchequer, announcing what some people are describing as a partial nationalisation of the banks. It looks like he's going to put 500 billion of taxpayers' money into it. Could you give us your reaction, please?
On Monday and Tuesday of this week, bank shares plummeted, some of them up to 40 or 50%, and that was a reflection of the deep crisis in the core banking system. And there's something like a cardiac arrest where the whole credit system is seized up and there is no supply of credit to the rest of the economy, which if it continued would lead to a slump in the real economy. This has been going on ever since the subprime mortgage crisis broke out in the US last year and affected a large number of US and European banks. And although there's been a massive increase in liquidity, that's capital made available by the central banks to the major national banks, it still hasn't cured the crisis. So Darling's package is aimed to try to overcome the cardiac arrest that has taken place, and it consists of a number of things. One is up to £50 billion will be made available for the banks if they accept it to recapitalise them. That's to give them to strengthen their capital base, and in return the government would take preference shares in those banks, and that's what amounts to partial nationalisation. Although the conditions that Darling has proposed are actually extremely weak. They haven't spelt out, for instance, how they would exert control. They're not proposing to take positions on the boards of those banks. They're simply urging that the banks begin to lend money again, and they're also saying that directors' salaries should be limited, dividend payments should be limited, and so on. But there's no mechanism yet proposed for the government to control the actions of the banks. Now, the other measures that they're taking would be to extend further liquidity to the banks. That's roughly another £200 billion, and also to provide guarantees. That's for the government to underwrite the bank, the so-called interbank lending. That means the money that the banks lend to one another in order to conduct their business on a daily basis. From a socialist point of view, the question is, what will it mean for workers in this country? And 500 billion, which is given as the rough total of the package, is an enormous amount of money that it will have to be paid for in some way. Now, it could either be paid for by taxation, which is unlikely since there is already the beginnings of a serious recession in the economy, so it would be very unwise from their point of view, or anybody's point of view, to raise tax in this situation. It could deepen the recession. And on the other hand, it could come through cuts in government expenditure, and that is likely to be the route that they will take. And there will be an enormous cutback over the next few years of spending on the health service, education, vital services, in order to pay for the colossal recklessness and predatory lending of the banks, which has led to this present disastrous position.